Welcome to a data-driven look at Bitcoin's market in 2025. The old 4-year cycle that once dictated Bitcoin's booms and busts is breaking down, forcing us to rethink our models. Today, we'll focus on the bull market support band, or BMSB, a simple but powerful indicator that's helped investors cut through the noise. With Bitcoin holding above $112,000 and on-chain metrics showing new patterns, understanding the BMSB is more critical than ever. We'll explore how institutional capital, global monetary policy, and the rise of ETFs are reshaping the market. Our goal: give you a rational, disciplined framework for navigating Bitcoin's new era. The bull market support band, or BMSB, is a crucial technical indicator on the weekly Bitcoin chart. It's not just a single line, but a zone created by combining two powerful moving averages, the 20-week simple moving average, or SMA, and the 21-week exponential moving average, or EMA. These averages smooth out price action, helping traders and investors see the bigger picture beyond daily volatility. The 20-week SMA gives equal weight to each week's price, while the 21-week EMA responds more quickly to recent changes, making the band both stable and responsive. When Bitcoin's price consistently trades above this band, it's a strong signal that the market is in a healthy, sustained uptrend. Historically, this has been a hallmark of bull markets, where optimism and momentum drive prices higher for extended periods. The BMSB acts as a dynamic support level. During market corrections or pullbacks, Bitcoin often finds support at this band, bouncing off it before resuming its upward climb. This behavior reflects the confidence of buyers stepping in at key levels. However, if Bitcoin falls below the BMSB and struggles to reclaim it, that's a clear warning sign. It often signals that bullish momentum is fading and the market may be transitioning into a bearish phase. In bear markets, the band flips its role and becomes a resistance zone. Instead of supporting price, it now caps relief rallies, making it difficult for Bitcoin to break higher. This shift is a classic sign of a market under pressure. For investors, the BMSB offers a simple, visual cue that cuts through the noise. It helps you avoid emotional decisions, like panic selling during dips or chasing rallies, and instead encourages you to stick to the prevailing trend. Remember, the BMSB isn't about predicting the future or calling exact tops and bottoms. It's about reading the present market structure and understanding where Bitcoin stands in its cycle. By watching how price interacts with the band, you can objectively assess market health, reduce guesswork, and act with greater discipline, making the BMSB an invaluable tool for navigating the ever-changing world of Bitcoin. 4 years, Bitcoin followed a predictable 4-year cycle, driven by the halving, a programmed event that cut new supply in half every 4 years. Each halving triggered a supply shock, fueling explosive bull runs and dramatic corrections. The pattern: pre-halving rally, post-halving parabolic run, then a brutal 70–80% bear market. After each crash, a slow accumulation phase set the stage for the next cycle. This script played out after the 2012, 2016, and 2020 halvings, making cycle timing almost clockwork. But the cycle that began after the 2022 low has broken from this pattern. The drivers of Bitcoin's price are changing, and the old roadmap no longer applies. The 2021-24 stager den 2025 Bitcoin cycle has truly rewritten the rules. In a move that stunned both seasoned investors and newcomers, Bitcoin shattered its all-time high in March 2024, well before the anticipated halving event. This was a dramatic departure from every previous cycle, where new highs only arrived after the halving had reduced the supply of new coins. This time, the surge was driven by a wave of institutional demand. Major financial players, from hedge funds to publicly traded companies, poured capital into Bitcoin, propelling its price to an unprecedented $73,000 before the halving even took place. The market moved ahead of schedule, signaling a new era for crypto. Throughout this rapid ascent, the BMSB indicator consistently confirmed the uptrend, offering reassurance to traders during every dip and correction. It became a trusted guide, helping investors navigate the volatility with greater confidence. Now, 18 months after the halving, the market has defied expectations yet again. Instead of the typical post-halving crash, Bitcoin has maintained a robust position, trading steadily above $112,000. The resilience of this cycle is unlike anything we've seen before. The dramatic 70–80% corrections that once defined Bitcoin's cycles are nowhere to be found. The market has remained remarkably calm, with only minor pullbacks and a general sense of stability. Volatility has decreased, uptrends are lasting longer, and corrections are much shallower than in previous cycles. This new environment has made Bitcoin more attractive to a broader range of investors. The BMSB indicator continues to guide market participants, but the underlying reasons for its strength have evolved. It's no longer just about supply shocks or retail speculation. Today, the halving's influence is fading into the background, replaced by powerful institutional flows and shifting macroeconomic forces. Global capital is now a driving force in Bitcoin's price action. To truly understand this new reality, we must look beyond Bitcoin's code and mining cycles. The story now unfolds on the world stage where economic policy, institutional adoption, and global finance shape the future of Bitcoin. The halving's impact has faded as most Bitcoins are already mined and new supply reductions are marginal. The real game-changer spot Bitcoin ETFs launched in early 2024, opening the door for institutional capital. Financial giants like BlackRock and Fidelity legitimized Bitcoin for conservative investors. ETF inflows created steady, structural demand, less emotional, more persistent than retail FOMO. This institutional buying stabilized price, dampened volatility, and drove the pre-halving all-time high. The market now responds to continuous demand from major players, not just programmed supply shocks. Bitcoin's narrative has shifted from a tech event to a global asset allocation decision. The real fuel for Bitcoin's rally is global liquidity, not just ETF demand. Central banks, especially the US Federal Reserve, have pivoted to easier monetary policy, cutting rates and making cash less attractive. This abundance of cheap money drives investors towards scarce assets, like Bitcoin. In Asia, Japan, and China are also expanding stimulus, further boosting global liquidity. As fiat currencies are diluted, Bitcoin's fixed supply becomes more appealing worldwide. The new Bitcoin cycle now moves in sync with central bank policy, not its own halving clock. As long as liquidity remains abundant, a deep bear market seems unlikely. Bitcoin has become a barometer for global economic conditions. In this new era of digital assets and rapidly evolving markets, risk hasn't disappeared, it's just changed form. The landscape is more complex, with new opportunities and new pitfalls emerging every day. Investors must adapt to this shifting environment, and that means having robust tools and strategies to navigate uncertainty. The Bull Market Support Band, or BMSB, remains a vital tool for managing risk and staying on the right side of the trend. It acts as a dynamic guide, helping traders and investors make sense of volatile price action and avoid emotional decision-making. As long as Bitcoin's weekly closes are above the band, the uptrend is considered intact. This means there's no need to panic during minor pullbacks or short-term volatility. The BMSB provides a clear, objective signal that helps you stay focused on the bigger picture, rather than getting caught up in daily noise. If price decisively breaks below the BMSB, that's your cue to reduce exposure or take profits. This signal is designed to protect your capital and lock in gains before a potential trend reversal. It's not about predicting the future, but about responding to what the market is actually telling you. This approach removes emotion and guesswork from your trading decisions, letting you react to real shifts in market strength. By following a systematic process, you can avoid the common pitfalls of fear and greed that often lead to costly mistakes. You don't need to call the exact top or bottom, just follow the trend and protect your gains when the signal changes. The BMSB empowers you to stay disciplined, riding the uptrend while it lasts, and stepping aside when conditions shift. In a market increasingly led by institutions and sophisticated players, dynamic data-driven risk management is more essential than ever. The BMSB gives you a professional edge, helping you keep pace with the strategies used by top market participants. Ultimately, the BMSB keeps you focused on what the market is actually doing, not what you hope or fear it might do. By relying on clear signals and proven strategies, you can navigate the ups and downs of the crypto market with greater confidence and control. On-chain data adds another layer to our analysis. In 2025, even as Bitcoin topped $100,000, long-term holders kept accumulating, not selling. Unlike past cycle peaks, the percentage of supply held by long-term holders rose, signaling smart money expects higher prices. Network growth remains healthy, with new addresses and steady ETF inflows supporting the rally. However, some technical signals suggest we're in the late stages of this bull run, momentum is slowing, and risk is rising. Analysts recommend taking profits and reducing risk as the cycle matures. The combination of on-chain strength and late-stage signals means opportunity remains, but caution is warranted. Stay alert for signs of exhaustion as the market evolves. The evidence is clear. Bitcoin's 4-year cycle is broken, replaced by a market driven by institutional demand and global liquidity. The BMSB remains the most reliable technical indicator. Watch it closely. A weekly close below the band is your first warning of a trend reversal. Monitor central bank policy. Any shift away from easy money could pressure Bitcoin. Watch on-chain data for signs of long-term holders distributing. Bitcoin is now a global macro asset, not just a speculative tech play. The principles of trend following and disciplined risk management are more important than ever. Respect the data, follow the BMSB, and stay rational in this new landscape. The 4-year cycle may be dead, but smart, data-driven investing is alive and well.